you've recently been very vocal in terms of what you term the new investment paradigm. Can you talk more about this shift and exactly how alternatives play a role in it?
Sure, Paul. So I think what we're encountering is a shift from QE to QT. I call it the new QT investment paradigm. And that is making liquidity tighter, and it has implications for all asset classes. And there are really four primary factors that are driving this liquidity, lack of liquidity. One is QT itself, which is $95 billion a month. We're taking the Fed balance sheet down from $9 trillion. It's now at $8 trillion. The second thing is that when you do QT, often things break, and the regional banking system is under stress right now. About 20 trillion of deposits, 9 trillion of those are uninsured. And so you know the implications of that. Regulatory tightness in that area. The third factor is that people are moving assets from the commercial banks to money market accounts, and they're doing that because you're getting a higher yield. We were talking about that backstage. And fourth is we have this wall of refinancing, $2.5 trillion over the next 2 years of loans that were given in really a zero interest rate environment that need to be refinanced. And that's all demanding capital. Now, what does that mean for portfolios and for people that are thinking about asset allocation? A couple of things. One, the 60-40 portfolio or the 70-30 portfolio, which most of us, that's the general, I would call Uber wrapper for what we do. Stocks and bonds have been correlated about 62% of the time if you go back 50 years. But what QE did was it was a period of time where they were uncorrelated. And I think 2022 was this big wake-up call for the 60-40 and the 70-30. So I expect more volatility. I expect people to need solutions for that 60-40. And in this period, you've got to ask yourself different questions about your portfolio. What's the yield of my portfolio? How much of my portfolio depends on equity returns? So we were blessed during the QE period to have equities go up every year for 13 years, double digit. That's fantastic. Sideways markets, you need a different playbook.